Good afternoon, traders. This is Nuke coming at you for another episode of Day Trading with Nuke. Tonight, we're going to be going over our market recap for September, oh, good Lord, I'm off, October 15th, 2018. And in that, we covered EARS, NEO, CRON, and Apple. So, given a quick look at EARS, as you see on what we had it marked off with, we were within, 3 cents of hitting the $2 mark. That's a little more reasonable than what it bumped out to. That's what we originally drawn out to. But 3 cents, I'd call that pretty damn spiffy. And it continued this slow upward trend all day long. Pretty good trade. I called out 2 of them early in the morning. I didn't do a whole lot today. I was tired. I called it early, had some internet issues come up. Guys came out to fix that. But anyway, these were 2 that I called out. Had an entry point here. My stop loss was around here. And then this was going to be my first target profit take with a second target profit take above that. It didn't quite shoot up like I'd expected it to with a couple more of the larger candles, which would have got me up there. Stayed in the trade a little longer than what I would have wanted to. Getting out right here around the 141. Just salvaging what you can out of it. Caught the rejection of the Bollinger Band and was looking for the break above the VWAP. Next entry point I called out was at the 135 with a stop loss of 128, I think it was. Yeah, 128. Anywho, first target profit would have been around the 148 with a second target profit of 161. Of course, you see it never made it up there. But all in all, well, at least it didn't make up there in the time frame I was looking at. But solid player for the price, you know. I mean, it was only a $1.38 stock. A lot of shares you can take with that relatively easily. Next up is going to be NEO. NEO was nice to us today. So what I liked about NEO, it had a really good range of motion. It only got up about half of what it should have for the pre-market action, and it worked out really nicely. Called out a couple of trades on it. It did respect the fib very well. So on that first one we were looking at, called a entry off of the bounce off of the VWAP. So the waited for the confirmation, got it on the next candle following. So this was our selected entry point around the 797 point, expecting it to break the $8 mark. Our stop loss would have been around 793, and our first target take would have been up here at the 812, and second target take at the 824. But because of the price, you're able to go in kind of heavy. And that first one worked out pretty nicely. And then capitalizing on this, waiting to see it. It broke through the fib, came back, retested it, catching on the second red candle, called a possible short here, risking the high of the previous candle at the 815. So shorted somewhere around the 808 to the 812, rode that down to Fibonacci. Well, as it broke the VWAP, first Fibonacci bounce, and then the second Fibonacci is down here. So that was a play that worked out really nicely. That's also about the time that I was going to bed, somewhere about 20 minutes after that. And then the Comcast guys showed up. But that was a really good trade. Very consistent ticker, at least from what I've seen. What I really liked about this one throughout the day is just how well it was respecting these fibs, how well it respected the pre-market, or not the pre-market, but the market open. And let's see where else. Yep, see it come back to the pre-market high. Just a fairly consistent ticker all day long. Wasn't a super mover, but for the price, you could take the right number of shares and make that a reasonable trade for yourself. Next up, CRON. CRON hit within a penny or two. Yeah, 1 penny or so. Or maybe it even at the very end of the day, it hit dead on. Oh, look at that. Spot on. 1175. So it did respect the fib really well. And what I liked about it was all day long, it was respecting these fibs. So bam, just stair stacking them in here, you know, charted out the resistance very nice consistently. I mean, you can damn near set your watch by some of this stuff. I was still dealing with the Comcast guys, but I was on the hook with one of our traders, and I called this out to her. We had watched this move up, and then it had crashed back down. Her and I were talking on the phone at the time about selecting entry points and exit points. And I told her that if we'd played this somewhere around here, once it retested this fib, it had bounced off of it, it came up to check this one, bounced down. I was still banking that this would be a long-oriented trade. So she selected herself an entry point of around 1114 to catch this bounce. And I don't know if she took her trade here or if she would have taken it here, but she might have waited for that second confirmation. Well, anyway, 1105 was her stop loss on that, with a first target profit of 1136. And we had talked about how far up it could have went, possibly all the way up to the 1175, but her plan was to take it at the first fib just in case it didn't break the previous high of day. So with that, right around here is the last time I'd spoke with her, but she was able, if she took the trade, to capitalize on this nicely. As you can see, it ran right into that fib, slightly rejected it, then broke it. And then if she had the guts to and stayed in it all day, she would have been able to go all the way up to the top, which was at the 100% extension mark. So I don't know what she actually did on that. I'm sure I'll talk to her tomorrow, but I hope it worked out really good for her. So all in all, what I've seen today of the four tickers, EARS, NEO, CRON, and Apple, I really liked what they did as far as for how they respected the fib. And of all of those, moving into Apple, this was the one, it was pretty consistent with what I expected. I was a little shocked that it dropped instead of falling or climbing out of the gate, excuse me. But once we seen that first initial drop and the retest of the VWAP, you had a really safe play getting there at the VWAP. And you could have made this for two fibs down if you wanted to short it. When it retested up here, broke above the VWAP, did not make the fib. We were on the high side of the Bollinger Band. Again, you could have entered anywhere here around the VWAP with setting a stop loss right above and then ride that down one or two fib below. You would have come out smelling like a rose. So if you had decided to play this one all day long, it was a pretty solid trader, even though it didn't move a lot of points compared to what Apple could move. It was pretty consistent. And let's see, what did that actual range equal up to? Yeah, about $4 worth of movement, $3.80 some cents, $3.50. So that's not bad. I mean, you can totally make some bank off of that as long as you're on the right side of those trades. Anyway, that's what the day was like for us, and I hope you enjoyed my call-outs. I think this was one of the best sets I've had in a while. I mean, I absolutely love that CRON one. Let's take a look at that again. I mean, that is just spectacular, just how well it respected that. And for a $10 stock to have $2 worth of movement, or $1.67, 16% movement in total. God, that's just crazy. That was a really good one. And then let's see what NEO actually was. Was it NEO? EARS. One. Yay. This was it. So, wow. 60 cent, but a total of a 43% gain on a sub $2 stock. I mean, that's just baller territory if you were able to trade it. Again, hope this is doing you all some good. I hope you enjoy the way I break these things down. I know a lot of people complain about how cluttered and crowded my charts are with information, but the good news is I got to stare at it, not you. If you don't like it, you know, God bless you. So many people like a much cleaner looking chart. I explain to a lot of people on my end when I'm looking at that, because of the size of my screens, it actually doesn't appear that cluttered to me when I'm trading it. Maybe if I can kind of show you in detail how it would look. So there's only, 1, 2, 3, 4, maybe a fifth line up here sometimes. So it's really not that much of a distraction during the trading day for me. But when I'm doing these recaps, yeah, I can see how it would be a little confusing if this is all you saw. But once you get used to the system and you kind of understand the methodology behind the madness, it clears up a lot of the visual traffic for you. What I like about this is that it takes me literally seconds to pick my entry point, my stop loss, and where I'm going to take profits. The less time I spend making decisions, the less time I spend with decision fatigue. So because I'm not wearing my brain out trying to decide, where in the world would this thing stop at? If I wasn't trading with any of these indicators, let's just say I had it stripped down bare essentials. Where do you shoot for here? Are you shooting for 10 cent, 20 cent marks? Okay, I could see where you would do that. But it's kind of blind territory, like you're having to watch your price action here. If I'm zoomed in like this and I'm watching for these candles here where they're at, right? And then I've got a gap here on the right. Of course, we don't have it right now. And I'm trying to watch the price action to where it goes to. I might have to shrink this or whatnot. It's hard to follow. Like even if I just had the fib projections that I marked off, the pre-market high, the pre-market low, 100% above, 100% below, and nothing else. There's a wide range of territory in here where you have no idea where this price action is going to stop at. But you throw your fibs in there. Maybe you do, maybe you don't, huh? And we'll let it load up. There we go. And suddenly you see how it's not so shooting in the dark. You can see where it respects it. You can see where it starts to come down and then bottoms out. You can see where it comes up, tries it, backs away, taps it, rejects it, comes back, and within a penny or two, you're spot on board. Here it rejects it, rejects it perfectly. Here it comes down, stops dead on balls. So the reason I use these things is it makes it so much easier. Just looking at this chart right now, if I were looking to long this here, right, and I was betting that it were bouncing off of this VWAP, all the way back here, I'm looking at it. If I miss this entry point, I'm waiting for it to reject and retest this VWAP. So it comes down, breaks up above, comes back down, tries to retest it. Now I've got one attempt at above it, two attempts above it, and when it finally didn't break through, I know that this is a fairly safe long. So once I get one or two candles into this, I can reasonably assume that because it hadn't broke down, that I could safely take this as an entry point. I've got a easy to identify point of bailout for my stop loss. Or if I wanted to go below that, I'm only a few cents away by selecting the previous candle's bottom. So I've got two different stop losses that are very easy to define, very clear risk. So here I am entering at 146, but at 144 or 142, either one is a very viable stop loss. I've got a very predictable target, and I've got another very predictable target up here. Now, would I be aiming to shoot for this one? No. But it's one of those mile markers where if it breaks this and then it drops back down, it's easy to cut my losses before I'm at a loss on the trade. And then once it starts continuing up, when you start seeing this resistance here and you get this drop and you get this rise, but you get this second red candle, by this point, what you should be seeing is that you're setting in a lower high. So this right here isn't the time, to stay in hoping this thing is going to get out here. I know I was here already. So that's a 50 cents to, let's call it a 4 cent difference in where we were looking at getting out. As long as I get out at any point crap, wrong tool. As long as I get out at any point up in here, right, that's still a good trade. I might have lost a little bit of my profit potential, but it's still a good trade. And again, when you're playing these lower price tickers, you have to go in with higher volume to make up the difference. But I mean, still, if you're able to capture, let's see what that was at. Let's say you were able to capture just a portion of that, because we got resistance here, we got resistance and support here. So we'll measure it there. 8 cents. 8 cents of movement, that's a 5% change in price action on a sub $2 stock. You know, so this is something I would probably have gone in with about 2,000 shares deep. It only puts you about 25, what is that, 25, where did my chart go? 23, let's see, I can't math for shit, guys. 2,000 shares times 138, $2 or $2,760. So you're sub $3,000 total investment, and we had 8 cents of movement. So that's about $180 trade right there. You know, I mean, that's nothing to sniff at. You know, you're looking at, that was 29 minutes or so, give or take 5, for where you decide to get out, and you're making $180 in 30 minutes with minimal risk. I mean, your risk on this thing was defined at 4 cents. So, well, 3 cents. Yeah, let's call it 3 or 4 cents. Either way, that would have been 3 or 4 cents. God, I'm horrible with math. Like 30 or 40 bucks. 30 or 40 bucks to make 180. That's a good quality trade, guys. You know, even on a really low dollar stock. I don't particularly love playing these because they're so volatile and easy to manipulate. But like we were pointing out, it was a good solid trade you could have taken. The whole point of going into this, guys, was just that the reason with me using those fibs, it makes it very easy to keep my methodology on how I enter trades, how I set my stop losses, where my target profits is. It's very, very consistent. It's less stuff I have to think about. And the less stuff I have to think about, the more time I can focus on the actual trades. I hope y'all are getting something out of this, guys. Hit the like button, hit the subscribe button. By all means, give me some feedback. Hit the description below and find me on Discord. We'll chat about it. All right, guys, I'll see y'all later.